Chewy can help your new pet feel more at home. Shop today for everything they need: food, treats, advice, and toys. Lots of toys. Pets are...
Yeah, I really don't see a lot of. I don't see a lot of that. I never saw gay people.
Hi, Catherine.
Shit. Can you hear me?
Yeah, we can hear you.
Okay. Okay. Well, did you just hear a conversation?
We did.
I thought it was muted.
Nope, everybody can hear you.
Oh, well, my bad. I'm trying not to pay $65 to get my hair, just my dead ends cut off. And we met a client and whatever.
We didn't hear the whole conversation. It was only
Yeah.
like a second or two. Where's Big Mo at? Everybody have a good week this week?
Well, my dog end up pregnant again. So that's fun for me.
All right, happy Friday, everybody. Happy Friday, happy Friday. Can everyone hear me okay?
Yes, sir.
Yep.
All right, excellent, excellent. We're gonna go ahead and get started. We're letting a few other people join the room. Happy Friday, team. I'm glad to see everyone on the call. Okay, so we're gonna go ahead and get started.
So if they say no, you cannot get out of the lease.
I'm sorry.
They can find a tenant for them. You know that program is coming up.
Go ahead and put your
The
phones
program
on
for
mute.
20% down payment. You make sure I'm on the.
If you can put your phones on mute for me, please. Put your phone on mute if you don't mind. We want to make sure that we're getting the information out today. Okay, so if you can put your phone on mute, I don't want to disturb anyone from getting this information. Okay. 1 second here. Let's see. Okay. You guys can see my screen, okay?
Yes. Yes.
All right. Excellent. Okay, so I'm going to go ahead and get started. This is our Friday night huddle, our Friday night call. You all know that this is the call that we do every Friday. This is where we get together as a team to talk about different products and different services that we have going on, and just different topics that we can come together as a team in a non-threatening environment. So you guys know that this is interactive, okay? This is an interactive call, so you guys can jump in and ask questions. This is more of a relaxed atmosphere. So some of you all that's new on this call, this is where we come and just as a team and just discuss some of our concerns and learn more, okay? So today we're going to be talking about one of my favorite products, which is gap funding, okay? I want to get into, I'm sorry? Okay, you guys put your phone on mute for me, okay? Please put your phone on mute. Okay, so gap funding. Okay, you guys can see my screen okay, right?
Yep.
Okay,
Yes,
excellent.
Yes.
Okay, so gap funding, guys, is one of the products that we have to offer to our clients, and this is probably one of my favorite ones because it's an easy product to get approved. It's something that everyone definitely needs as it relates to unsecured funding. A lot of times when people come and they look for funding, sometimes they just need to bridge the gap. Okay, they need to bridge the gap on whatever project that they're actually working on. So some of you all are realtors, some of you all have startup businesses, and you have clients with startup businesses, things of that nature. And then sometimes they can get approved from the bank, from our lending institutions, but they may be short a particular percentage to actually make the deal close, which is the actual gap. So what we want to talk about today is actually filling that gap. And I want to talk to you today about how you can utilize this product here and make a lot of money, okay, just with the Sequoia platform, okay? So that's what we're going to be discussing today. If you guys are interested in making money, somebody raise your hand, sound interested in making money. I know I know some few people here interested in making money. All right, I see Alicia's hand up. I see Carolyn's hand up. All right, Joey's hand up. Joey, you just gotta Joey just make some money today. I see all his hands up. Good, excellent.
My hand's up. I don't know how to do it yet, but my hand's up.
Your hands are up. I see your hands up. Just send a smoke signal. All right, so we've got a lot of hands up. Okay, good, good. So if I was able to show you all how to make 6 figures just from doing a couple of deals, 2 to 3 deals a month, this is the gist of this call. If I was able to show you that, would that make you excited? That would get you excited. All right.
Absolutely,
So,
absolutely.
all right, we're talking a couple of deals a month,
Yes,
maybe
sir.
2 to 3 deals, and you're making $140,000 a year. Okay, so we're gonna make that right on this product, and I'm gonna show you how to do that. So starting out, what is gap funding? Okay, gap funding is the amount of money that's needed to fund ongoing operations or future developments of a business or a project. Okay, that's not currently funded with cash or equity or debt. Okay, so funding gaps can be covered by investments from venture capital, angel investors, equity sales, or through debt offerings or bank loans. Now, what does that mean? That means that if you have a project and you don't have all the money to fulfill the financial commitment of that project, typically what people do is they will get money from equity or different debts, or they would get it from angel investors, equity sales, right, of your projects or your properties, or debt offerings, raising capital, using PPM, private placement memorandums, things like that. This is a lot of times, this is the way that they fill the gap and to get the capital they need to fund their projects, okay? The term gap funding, when you hear that term, and a lot of you probably haven't heard that term before, but if you hear that term, the initial term was used in a developmental stages of businesses. So a lot of times you will hear people saying they're starting business, they got startups, and they don't have all the capital they need to fully launch their business, right? How many have heard stuff like that? You know, these people have businesses, but they don't have all the capital they need to fund their business fully. Sometimes you can be underfunded and not have capital and you're starting a business. So what do you do? Unless you have a rich uncle, or unless you have equity in properties, or unless you're raising capital through PPMs, or you got an angel investor, what do you do? Okay? What do you do when you are in the early stages of your company or developmental? I had a young lady one time, and she's not on this call, and G, you remember this one. We had a Julie. She's a hair beautician. She started a product line for her hair care, but she needed more capital and she decided to take a gap funding loan to get the capital she needs so she can get the scientists back in the laboratories and get her product back on the shelves. And it was things like that, and it's companies like that or needs like that where gap funding would come into hand. It would come into play, okay? It would come into play. So what are some examples? What are some examples of when gap funding is needed, when you would consider gap funding? When projects that you may have or your client may have has a potential high profit margin, and they don't want to lose that deal. They don't want to lose that deal. I'll give you an example. We were talking to a young guy today for a refinance. I'm sorry, it was a purchase of a $2 million facility. Well, this facility was going to make them at least $8 million a year. Okay, $8 million a year. But guess what? They don't have all the capital to close that deal and to make that deal happen. So unless they have an angel investor, unless they have equity in different properties, or they want to raise capital through PPMs and using accredited investors and things of that nature, if they don't have any of that, this is when they would come back to gap funding. Okay, this is when they would come back to this unsecured funding. When you need to conserve your cash, you may even have cash in the bank. You may have cash that you can liquid cash, but you need to reserve your cash. You need to preserve it. You need to preserve your cash, okay? So this is one way or another option for you to do that. Use gap funding. Keep your money for yourself, okay? When you want to wrap out-of-pocket interest rate payments into a gap loan, when you need extra money to finish the project, these are different reasons. When it's taking longer than anticipated to sell the property and you're still paying interest rates on the primary loan, here's another reason that you can take out a gap funding loan, right? When you want to maximize cash on cash returns, you can use gap funding. Okay? You can use gap funding for that very reason. What are the requirements? People want to know, okay, well, what do I need to do to get gap funding? So this is the recipe. Here's the recipe. Remember we talked about this on last week's call, maybe the week before last, that when obtaining funding, it's just like anything else. You cannot win the game unless you understand the rules. You can never win the game unless you understand the rules, right? So here's the rules. Here's the recipe. You must have a 650 credit score. Your clients must have a 650 credit score. So when you're qualifying customers or qualifying yourself for this money, this is what you have to have. If you're looking for $100,000, you're looking for $50,000, you're looking for $300,000 or $200,000, here's the recipe. This is the recipe. And this is what you have to know. This is the part where everyone gets confused at. This is the part where people say, well, yeah, I want to get gap funding because I got a 700 credit score, but yet they don't meet all the other requirements. Okay, you have a 700 score. Great, excellent. We're in the right direction. But do you have more than 6 inquiries in the last 6 months on your credit report? Do you have 3 at least active trade lines that's open reporting to your credit report? So when you're looking at the report, you want to just simply count down. Okay, here's one trade line, there's another one, there's another. Primary credit, right? So when you're looking at the credit, this is what you're looking at. Okay, here's the recipe. Do you have any new lines of credit or revolving accounts within the last 6 months? That piece right there stops a lot of people from getting funded because they go out and they take different loans out and they got brand new loans And a lender don't want to look at that, because if we're going into a lender and asking a lender for, $100,000, and they said, well, you just took out $50,000 with this other lender, or you just took out a $30,000 loan with this other lender, it makes them concerned about your ability to be able to pay it. Okay, so they don't like new debt open within 6 months. This is the recipe. You have to be on your job. Okay, if you're working a job, you need to be on that job for 6 months at the same job. Retirement or disability income is accepted. So you can get people on retirement and disability income and get them approved for gap funding. Okay, they must have at least $27,000. They must make at least $27,000 per year minimum. Now, people say, well, how much can I get? Well, that's going to depend. It depends on what? It depends on your income. It depends on your credit, right? So if you're making $27,000 a year, great. That's a minimum. But don't expect to get $100,000 and you're making $27,000. Okay? So keep that in mind. Ideally, no one should have more than 60% of their total available credit used. That's another issue that get deals killed. They use 60%, over 60%. I like to say 50%. Okay, just to keep it, culture. 50% of their debt should not be used. Their available credit should not be used. Any bankruptcies must be discharged for 2 or more years. So if people have bankruptcies, they have to get it discharged. This is the formula. This is your formula for getting your loan approved. This is the formula for getting your customers a loan approved. So there's no need, and when you have a client and you haven't checked this, what we're going to do when we do our compliance call, we're going to go down this list to find out if they meet the credit criteria. Do you meet a 650 credit score? Do you have more than 6 inquiries reported to your credit in the last 6 months? Do you have anything new? These are the questions that we're going to ask when we're on the phone with the client and when we're doing our compliance call. So when you're talking to your client, or this is for yourself, find these things out. This way you're not wasting your time, you're not wasting anybody's time. Eliminate, any wasted time if they don't meet these criteria. Now, let me say this to you, that some people may meet some of these criteria, but most of them, but then they have a credit issue. What do you do? Somebody give me the answers. What do you do if they have a credit issue? What would you do if they had a credit issue, but yet they have 6 months at the job, they don't have a bankruptcy, they have the income, their credit usage is lower than 50%, but their
Depends on
credit
what the
score
issue
for
is.
some reason is down to 600.
Credit repair.
Credit repair, exactly. We're going to move them right into a credit repair program. Okay? This is where you start cross-selling. We're going to move them into a credit repair program. Some of you all on this call right now have gone through the credit repair program, so you know the results that we deliver. Okay? So this is what you want to promote that. All right? All right. Moving right along. Real estate investors. Okay, so this is what we primarily use gap funding for. So a lot of you all as real estate investors, which a lot of you all are on the call right now, as real estate investors, gap funding reduces or eliminates the cash that you tie up in the down payment. Okay, so in other words, you can use gap funding to achieve 100% loan to value and financing. So people are asking, is a 100% loan still available? You can make it available. Are the banks giving out 100% loan, LTV, just straight out loan? No, they're not. Just say you have a fix and flip situation. where we come in as a lender and give you 100% of the funds that you need for the rehab, but yet we only give you 85% that you need for the actual purchase. Well, that means that you have to come with 15%. Sometimes you may not have that 15%. What do? And you know this deal is going to render you a hell of a return, for lack of better words, okay? So now what do? You leverage gap funding. So now you can put this deal, or you can put this funding option to your deal to get to 15%. You borrow the 15%, and then you borrow the rest from us for the fix and flip. Or if it's a 20% down and you're doing a buy and hold, but you don't have the 20%, get the gap funding. Utilize gap funding to get to 20%. Y'all with me? Okay. How does this process work? How does the process work? The very first thing that you want to do, number one, is you want to determine how much you or your client needs. You don't want to go in and just say, "Give me what you can give me." What exactly is it that you need? I want to know a number. When I speak with a client, I always ask, what exactly is it that you need? I want to know a clear-cut number of what is it that you need. One, it tells me what I need to work toward. Secondly, it also lets me know that you have a plan and you thought this out. Okay? You thought this out. Secondly, once we identify that number, you're going to have your client to complete a scenario form. The scenario form. That's basically the link that we send all of our clients from our back office, have them to complete the scenario form. Once they complete that, we're gonna do a pre-qualification call. As I stated earlier, we do a pre-qualification call where we actually call the client and we ask the client questions such as, what is your income? Have you been on the job for 6 months? What is your credit? Do you have more than 6 inquiries? In the last, all the questions that you just saw on the slide. Those are the things that we're going to ask the customer. Okay. Once we do the pre-qualification call and we find out that the customer is able to qualify, please put your phone on mute. Please put your phone on mute.
3 تاشون اینجا بودن 3-4 تاشون بودن با این صدایی که من میکنم این 7 ماچی که میزنم یکی تلفن است.
I'm sorry, you all. Please put your phone on mute. If you don't mind, please put your phone on mute.
Mo, you can mute him manually.
Okay. Okay. So once we complete the pre-qualification call, we're going to complete a full application and submit the necessary documents. So once the qualification call goes out, we now know that this client is a doable client. We want the client to be a doable client. We want you to be able to qualify for this funding, right? So now we're going to do a full application, okay? Once our back office sends you out a full application, then we ask the client, now you must be prepared to speak with our funding, with the lenders to do a funding call. Once you do the funding calls, we have the approval, you accept the amount that we got you approved, then you receive the funds in your account via ACH payment. It's just that simple. It's just that simple, okay? So I can't stress it enough that understanding the formula is the biggest hurdle. It's the biggest hurdle that you have to overcome. Just understand the formula. It's really simple. People have jobs, so you know they have a job. Sometimes they might have more than 6 inquiries. Guess what? Back to credit repair. Remove the inquiries. Sometimes their scores may be lower than 650. Put them back into credit repair. Boost their scores. The only thing that we can't help them with is if they have income issues. So, but if they have a job and they can prove their income, then we can help them. Okay? If they have a business and they can prove their income, then we can help them. Okay, so they will do a 4506T, which means that they're going to check the taxes of your client. So if your clients are trying to get funded, they must have filed taxes. Now, if they're a W-2 employee, they typically don't check, they typically don't do a 4506 for W-2 employees. They'll do an 8821, which is the same as a 4506 for businesses, but they will conduct that for a business. So if you're in business or if your client is in business and they didn't file taxes or their taxes don't match up to what their income is, it's going to kill their deal. Is gap funding expensive? You know, that's a question that everyone wants to know. How expensive is gap funding? The actual rates for gap funding is about 8.5 to 11.29%. That's the type of rates that you're going to see. Okay? But it's a lot of factors that go into play. The factors that's in place is the credit score, the annual income, and the debt to income ratio. Okay? And the debt to income ratio. So you can count on at least 8.5 to 11.29% as being your interest rate for this type of funding. How much funding can I receive? $30,000 to $350,000 via our capital stacking process. You can get $30,000 to $350,000 by way of our capital stacking process. How many of you all know what capital stacking is? Okay, I'm glad you asked. Capital stack, okay? Capital stacking. This is a term in real estate, guys. This is an old term. A lot of people use this technique, but capital stacking is using real estate financing to describe various sources of funding that's used to finance the project. It's various sources of funding that's used to finance a project. The capital stack is made up of different types of financing, you all. It has its own risk, and these different finances have its own risk, okay? It has its own repayment priority or methods, and its return expectations. Why is that? Because it's different lenders. Different lenders have their own repayment, different lenders have their own return expectations, and different lenders have their own risk levels. Here's some examples of some different types of financing that's typically used to make up capital stacking. Private funding, senior debt type funding, preferred equity, personal funding, mezzanine debt, when you're building buildings, things of that nature, common equity. Okay, look up some of these things, okay? Look up some of these different ways. What's the process that we use, though? What do we use? We typically use senior debt. Now, this is the first and most secure layer of financing in capital stacking. Okay, it's provided by multiple banks and other financial institutions that we use to help the client reach their funding goals. It also offers lower risk levels to the client. This is why clients like this. They get to sign their name on it. They don't have any property involved. Nothing using collateral and anything of that nature. So senior debt is the process that we use. We're basically utilizing the lenders that we have in our network, and we have a lot of them. We know where to go to get the money, right? So if you know that you need $100,000 or $200,000, well, banks is not typically just giving you $200,000 in one lump sum now. I remember back in the good old days, when they were, we used to get money from banks like Wells Fargo. Okay, back before the economy crashed in 2008, they were giving out bigger limits. But of course, after 2008, everything changed. Banks became more conservative. Their risk management measurement levels were heightened. Okay, so everything became a lot tougher to get. All right. How much? What are the fees? What are the fees? Typically, industry standard is 20% on the back end for capital stacking. That means that we are going out and getting loans from different banks, and we know where to go to make your funding needs come to fruition. Okay, so 20% is for expedited. So if you're in a situation where you need expedited funds within 10 days or less, we're doing 20% on the back end. Anything above 10 days is going to be 15% for standard processing. Okay? You all with me? It's 20% for expedited. We can do that. Means that, what does that mean? That means that we can actually do these loans expedited in 3 to 7 days sometimes. But 10 days is the threshold. So 20% would be on the back end. So, okay. 15% for the processing on the standard. Now, what have we all been waiting for? We all know that this is the standard rules. This has always been the standard in terms of the fees on the back. Everybody knows this, okay? This is just a standard. The question is, how much money can you earn and make utilizing this for your clients? This is the new compensation plan. I'm gonna, Joy, you just got off. Joy, you there? Can I use you for a second?
Yeah, that's fine.
Okay, you just funded one of these prior to the new comp plan, correct?
Correct.
Okay, and you just got paid.
Yes,
All right. So, how big was your deal? $100,000?
correct.
Okay, so that was $100,000 for Joey. He just got paid. Now, Joey's deal only paid him $1,800 under the new compensation plan, but that's not bad. Still, you make $1,800 for $100,000. It's still not bad. But under the new comp plan, look at that, guys. Come on, 4%. 4%. That means that you're making four. Huh?
So can we change my comp plan?
Yes. 4%.
Backdated.
You missed it.
My life story.
So 4%, guys. So that's $4,000 for every 100,000 that we fund. Typically, we're going to fund $100,000 for them.
I have a question on that.
Sure.
It's 4%, but is through Sequoia, don't they pay like 46% of the 4%?
No, on this loan, this is the new comp plan for you, will be 4% for this. So this particular product, you will get the full 4%.
Okay, nice.
So that's
$4%
$4,000
off the amount funded, correct?
That's off of right. That's off of 100K, right? So what if we were only able to get them $50,000 and not 100K? You still make $2,000, right? But typically we're going to get them $100,000 or more, maybe $100,000 to $200,000. So on 200,000, you just made $8,000. Now, what do you need? You need 3 deals per month on average on the small scale. Just 3 deals per month. 3 deals per month. That's $12,000 a month. $144,000 annually. Just by selling this product. Just by offering people gap funding, looking for solutions to use this funding. This should be a product that you're pumping every day. Because even if you sold 1 customer, you still just made $4,000. And some people don't make that on their job. Some people don't make that on their job. So you mean to tell me that I can make $4,000 off of just bringing 1 client? Yes, or more. Because if we get them 200 grand, you just made $8,000. Your check will be 8 grand. Okay? I want you all to look at this and take this seriously. Take it seriously, because this is what people are looking for. Remember, you sell money for a living. You sell money for a living. We have a plethora of different products that we can offer our clients, from construction loans to real estate to SETCs and development, land acquisition. I'm doing a business acquisition deal right now. You know, things of that nature. But here's a deal right now that anybody can do. This is a product that anybody can do and offer gap funding and get paid 4%. And get paid 4%, okay? That goes directly to you. Now, there's no excuses on not being able to bring in 3 clients, just 3. If you want to make 6 figures, just sitting on your phone or sitting at home, okay? You do that with this product. Go into the different groups, offer this product. Utilize your social media, tap into your network, see who needs money to fund different products. Some people just want the money for themselves, for whatever they can use this funding for whatever reason they have in mind. It's not earmarked for anything in particular. I don't care what industry that you're in. Okay, you can utilize this for anything that you want to use it for. It's easy to get, long as you can meet the criteria. Long as you can follow the recipe. Long as that recipe is followed, okay? Do they have a 650 credit score? Do they have more than 6 inquiries on their report in the last 6 months? Hopefully not. Do they have anything new reporting in the last 6 months? Right? Hopefully not. Okay? Do they have a debt to income ratio of over 60%? Hopefully not. So these are the things that you're looking for. And there's a lot of people on there. There's a lot of people out there that meet this criteria. So all you do is we send them out a link. We then do a consultation call with them to find out if they qualify. Then we send them out a full application. Once we do that application, we're going to request the documents, and bada bang, okay? And that's it. And it's just that simple. You get the client funded, the client gets their money, we then retrieve our fee from them, and you get paid. You know that we pay out every Friday. Every Friday is payday. So you want to be part of that payday list, okay? So this is something that you can do. How do you get started? If you're on this call right now, how do you get started in making some of this money? You need to get back to the person that invited you to this call. to become part of our organization. You need to get back to the person that invited you to this call to become part of our organization so you can start selling this money. Listen, who don't need what you have? Who don't need what you have? This is the only product. This is the only product, guys, that's out there that everybody needs. What's that product? Money. The product is money. The question is, what do they need money for? They might need money to build a building. They might need money to buy real estate. They may need money for working capital for their business. We have working capital loan. Okay? So whatever the case may be, you have money to sell. This product right here at 4% will get you, if you can turn in 3 deals a month, just 3. You got 30 days. You got 30 days to find 3 people that qualify. Out of all the millions of people that's in this world, they just need to know that you have the money for them. They need to know that you have the product for them. The only reason why you're not getting paid is because they don't know that you actually have funding. Okay? Go ahead, Catherine. What's your question?
Oh, I don't have a question. Sorry, I don't know. My hand's still up. Sorry.
Oh, okay. Okay.
Hey,
Cool.
Mo, can I say something?
Absolutely. Go ahead.
Just off of what you were saying, I was gonna comment, my gap funding deal was just from what you had told me, just from people in my phone that I know that might need the money. I was just calling people up, checking on them, see how they're doing. And then was able to close that $100,000 gap loan.
Yes. So what Joey is speaking of is part of our training is I told them to tap into their warm list. Tap into your warm list, your hot list, okay? And that's the people that you have on your phone. Who's the 10 people that you have in your phone that's in business that can utilize this type of funding? Who do you have in your phone that needs money? We got a lot of business owners on here. What's up, Jill?
Hello, hello.
You had a question?
Oh no, sorry. I don't know if I hit something. I was switching it over from my phone to the computer, my bad.
Okay. I got a Zoom user with their hand up. I don't know the name. It just says Zoom user. Did anyone else have a question? Come on with your question, guys. You got questions? Let's hear them.
Yeah.
Mo, can I say something?
Absolutely.
Go ahead, Carolyn. Go ahead, Carolyn. You go first.
Oh, thank you. I was asking, like, what type of business would I be looking to, I guess, prospect that would need 100K? Like, is it only the multifamily or the 1 to 4? Are there like warehouse truckers? Like, who am I targeting that may need a gap funding of that size?
So you're going to target. I mean, it doesn't necessarily have to be 100K, but that's your goal. I mean, your goal should at least get them $100,000. Okay. So when people come and they ask for $30,000 to $40,000, one of the things that I ask is, what do you need the money for? Well, they say, well, I need it for investment purposes. I need to make an investment. Typically, people are funded. People are underfunded. So I'll always ask, let's double that number. You need 40, let's get you 80. Might as well make it 100, just so you can be overfunded. Okay? So I'd rather you be overfunded than underfunded for your project.
So I have on top of that, let's say, because I know you can use this for anything, right?
Yes.
As long as you can meet the qualifications. If someone wants to say, take out 100K and invest in properties internationally, like Airbnbs outside of the US, and the returns are there. As long as they're paying whatever your terms and rate are, they can take the money and use it for that?
Absolutely, it doesn't matter.
All right. I just want to make it sure. Thanks.
Yeah, it doesn't matter. Go ahead,
And,
G.
on the gap funding, that's open to anybody. They don't have to be business owners or 1099.
Yeah,
They could
that's
just be
open to
your
anybody.
average Joe.
That's open to anybody. Okay. So a lot of you all have people that's doing a lot of real estate transactions. They need money to fill the gap. They need money to start the rehab project. Sometimes people, sometimes people are over leveraged. They're over leveraged and they need more capital to find the next project, to fund the next project. So this is a person that you would talk to. What about the person that wants to start their business? It's really hard getting startup funds, right? So this is startup capital. Here's your startup capital. Okay? This is a way for you to get startup capital. Go ahead, G.
Yeah, I just wanted to mention something on the sales end of this. Obviously, you're saying a lot of good stuff about, especially about the money being the product. Remember, the money also is the lender's product as well. So if they don't loan money out, that's their business, right? They have to loan money out. Obviously, there's underwriting standards. Mo talked about that. The recipe and that kind of thing. The big one though is that this is a results-driven program, right? So you're not charging people fees up front. So
right.
This is where you can kind of bridge the gap between if I have a service and you're going out to your clients or your prospects and you're saying, hey, I need $5,000 to do this job, and they're like, okay, well, let me think about it. I got to get my money together. Da, 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 da. This money comes after the funding, right? So it's much easier, much smoother from a sales standpoint to say, look, I'm going to get you the money that you need, and then you're going to pay me from the money that you got. So from a sales standpoint, this is a really easy thing, really easy to do. People need money, the product's money, and the fees and that kind of stuff, and your commission. That's going to come easily because you're not asking them for money up front.
That's correct. Thank you for sharing that. You're absolutely right. And once again, this is what in the slideshow, we talked about it being less riskier for the client, right? The client is offsetting their risk doing this. They're not paying up front, which means that everything is success driven. You don't get paid unless we're successful in getting them the funding, which is why we do the pre-qualification calls. Okay. What's up, Leon?
Hey, Mo, just real quick question regarding this gap funding. Let's say we just keep the $100,000 as the example, and they meet the criteria as far as the credit and all the other things. But what type of income level should that person should have to be able to get a loan that size?
And that's a great question. That's a great question. They should be making close to $100,000, really. If you want people to get like some serious dough, they need to make at least $140,000 somewhere in there to get some serious dough. Okay. Now keep in mind we're stacking. So, because we're stacking, we may get $50,000 or $30,000 from one lender and get another, $40,000 here and another 30 there, and to make up the actual funding pool of what they need. Does that make sense?
Yes. Okay.
So, and they can, like I said, they can use it for whatever they want to use it for. But it takes time. It's time consuming. You need to know where you're going. And it's also a timing. There's a timing with doing this. You cannot, when you're doing capital stacking, you cannot go out and go get a loan from one place and then wait a week and get another one, go get another. You can't do that. Everything has to be done at the same time. So it's very imperative that we have all the information accurate. We have all the documents in hand. We got everything that we need from the client before we send them out to our lending source. Okay.
Understood.
Yeah. So
Is it safe to say, basically, the funding amount they're asking for, they should be at least making that annually? Is that safe to say, or?
I mean, it's safe to say. It's safe to say they want 100 grand. You know, it's safe to say let them make 100 grand. They should be making 100 grand.
Yeah.
All right, but they want $100,000 loan. I mean, a one lump sum. I'm talking about one lump sum loan. Okay. So getting them 100,000 and stacking, they don't necessarily have to make 100 grand. Because if I get them 30 grand, that's just 30 grand, you know, 3 to 4 times. Does that make sense?
Yes.
But if they want 300,000, we need bigger approvals. If you want $300,000, fine. We need bigger approvals. You have to show more money. You can't come making $27,000 and tell me you need 300,000. It's not going to work. You got to do like G and get some money from under the mattress, right, G?
You probably answered this in the
that's what
slide.
I'm known for.
What'd you say, Carolyn?
You probably answered this in the slide, but when someone apply for the gap funding, what's the turnaround time?
So the express time is 10 days and less. That's where you pay 20% on the back end. It's 10 days or less. Or 10 to 20 days is our standard. That would be standard where they would pay 15%. Okay, so anything over 10 days, they'll pay 15% on the back end. And your commissions, let me say this, whichever direction, whether it's 20% or 15% on the back end, your commission is going to stay the same. So you're not going to take the ding. We will take the ding. We want you to be motivated to go out and to really push this product. This right now, I mean, you can make more off of this on some of your real estate deals for the people that's doing real estate transactions or some of the other stuff that you're doing. You just need one customer and hand that you can make anywhere from 4 to 8 grand on, depending on what we get them.
I got to stop you, Joe. Hey, it's Catherine.
Hey.
So I got a question. So with somebody that's getting $100,000 loan that has a credit score of 650 and above, what is their interest rate?
There you go. That's what I was going to ask.
So the interest rates start at 8.5 to 11.6 is what you're going to see. That's going to be your average.
Now, Mo, does that show up on the person's personal credit report that they took that loan?
Absolutely.
Okay. So will it show if they stack, does it show 4 different stack loans on their credit bureau?
Absolutely.
Okay.
Any other questions?
Can I say something else, Mo?
Absolutely.
Someone in the chat, I believe it was, I'm not sure. Someone asked about self-employed. Typically, we can definitely fund self-employed. Typically, they don't have a pay stub like a traditional, employee, 1099 or W-2. But just note that they're probably going to need more stipulations. Usually, that's going to look like 1 to 2 years of personal and business tax returns attached to that. Self-employed is nice because obviously a lot of times there's extra income there. They may also ask for a bank statement, things like that. So of course we'll gather all that stuff from the client, but just make your clients aware if they're self-employed that it might be a little bit extra documentation than just a couple pay stubs and that sort of thing.
Absolutely, he's absolutely right. They're going to ask for tax filing and also P&Ls, profit and loss statement. What they're gonna request. So he's absolutely right about that. Any other questions? I know you guys are fired up about this, okay? So listen, this is your opportunity. Go ahead, Marcus.
Oh yeah, my bad, Mo. I forgot the interest rate on the loan you said. I'm sorry about that.
It'll start at 8.5 up to like 11.6, somewhere in there.
8.4. Okay, all right.
And we can do this in any state. Now, let me say this. California and Iowa are limited. So if you're in California or Iowa, you're limited. Okay. So I'm not saying you can't get it done. It is limited. Okay. Any other questions? So start promoting this. If you have not joined our organization, most of the people on here, looks like, I'm looking at the team, most of the people are on my team here, but there's a couple of people here, maybe about 2 or 3 of y'all that have not joined our team. Join the team. Join the team just so you can sell this product and sell the other products that we have. You all are running across people daily looking for money. Leon, we're working on Leon's deal right now, 226 homes, development deal. Right, Leon?
Yes, sir.
Okay,
Another
so
one also coming.
there you go. So it doesn't matter. Benny Miller, he's working on church funding for us right now. He's working on some of our church deals right now. Okay. So I mean, we've got a lot of different options. Joey's got other deals he's putting in right now. You guys got to go out there. These people are looking for funding. They're looking for funding. They just don't know that you have it. They just don't know that you have it.
Hey, Mo.
Yes, sir.
Hey, it's Dean. You
Hey,
said the
Dean.
gap funding is limited in California.
It's limited.
Is that something
Yes.
is that something you can kind of gloss over now, or more details later, or what?
Yeah, the deal with California and states like Cali and New York is it's the laws. What is about those laws again?
So California has disclosure laws, right? They're consumer disclosure laws that are, that the state of California has determined that the consumer needs to know. So a lot of lenders don't like that, right? Because it might spell out crazy APRs, things like that. I would say this in California. I think we have solutions for California and New York. New York has some kind of disclosure laws too. Just the only thing is the interest rates might be slightly higher, because we have to go with B tier lenders. Maybe some of the A tiers aren't playing in California. I don't know particularly any state that is completely out of the question where we can't get them something, but just in some of the states like California, Nevada, a few other places like that, the offers might be lower, interest rates might be a little bit higher, or we may not be able to stack as many. So we're not turning away any deals,
Okay,
no matter what state they're in.
Thank you.
And hey, I see LaKenya. LaKenya, can you talk that second?
Sorry, I was trying to get. Hold on, let me get my husband quiet because he's talking in the background.
Okay.
Could you shush? I'm on the phone. Shush. Okay. Okay, I'm here.
Yeah. So I'm going to use you for an example. You're buying a restaurant, right?
Mm-hmm.
Okay. So the restaurant, we're going to use her for an example. Right now, she's in the middle of looking to purchasing a restaurant.
Yeah.
Gap funding can be used to handle the down payment. Okay. To close the down payment.
Mm-hmm.
All right. And then we can mix that with equipment funding. You see?
Okay.
So you buy the restaurant, all right? We fund 80% or 70%. Well, because you're buying it, so we fund like 70% to 80% of that. You take out a gap loan for the 20%, and then you mix it with equipment funding for the equipment, your stoves, your ovens, and all the things that you're going to need for the restaurant. So I just wanted to use you for example because there's other people that's a startup. See, that's a startup business.
Right. Okay.
And with the startup business, that's how you put it together if you don't have all the capital. That's exactly what you need to do. Someone said something about a church deal. Thanks, LaKenya. I was just picking on you for a second, okay?
No, well, that's good because at least my husband was able to hear it and understand because, you know, you had explained it to me, but he was able to hear it. So thank you.
Excellent, excellent. Okay. Was there another question that I missed? I saw something. Say it again.
The equipment funding, that's funded through the business or through the person?
That's gonna be funded through the business. But we're gonna pay the equipment fund is a little bit different. I don't want to switch gears here, but it's a little bit different than this, okay?
Well, I was just saying, if somebody's gonna get a gap loan, that's gonna show up on their DTI, on their personal income, under
Right, but remember you're doing all this at the same time. It takes time for all this stuff to show.
Oh, okay, I got you.
Yeah, it takes time for that stuff to show. So
if they do the gap funding, they can't in a month later or 2 months later do equipment funding?
we're gonna do that at the same time. So
Okay.
if we do gap funding this week, you're gonna be doing equipment funding this week too, or next week, or somewhere in that same space.
Okay.
Keep it
Can
in the
I
same.
say something, Mo?
Absolutely.
Also, too, you know, we have equipment funding that's based on receivables as well. So if they have business receivables, they won't care about DTI. So there's strategies around that. I mean, obviously that's for an established business.
Okay, yeah, I was talking to a client, they were getting ready to start up a business. And I was talking to them about gap funding. I also mentioned to them about equipment because they're gonna need refrigeration and different things like that for it, but they weren't sure what all equipment they were gonna need yet.
Yeah, we'll just do it at the same time, like Mo said, because you know it could take months and months for things to report. You know.
Okay.
Hey, it's
Okay.
Catherine. I have a question. I have one question real quick.
Go
So
ahead, Catherine.
I own a roofing and construction company here in Texas. And what if somebody wanted to take out, like, what's the smallest loan that you guys do? Or what do
That's
you
it.
prefer?
30 grand.
30 grand? Okay.
That's the minimum that you would have to take for gap funding.
Okay, yeah, because I'm trying to figure out with my business how that would work out to present that to people since I, run a roofing and construction company. So
Gotcha. Yep. So 30 grand is the max. I mean, the minimum that you have to take out.
okay.
for that. Okay. Any other questions? Okay. Well, if there's no other questions, let's get to offering this money to as many people as you can. Start joining some of the other groups. Tap into your network. You got people in your phone. I know people like Wanda. Wanda, she's on the call. Wanda, you've got a whole network of people that I know that you can offer this to. Tap into your network. They want this funding. Trust me. And if they can get it quickly, within 10 days or less, they're going to love you even more for that. Okay? All right. With that being said, that's the end of our Friday night huddle and call. Listen, we're here every Wednesday and Friday. You all, I appreciate you joining the call and taking time out of your schedule to hop on this call. Until next Friday, I'll see you then.
Thank you. Thank you, Mo. Take care.
You're very welcome. Wings up.
Thank you, Mo.
Thank you, Carl.
Thank you, Mom. Appreciate
You're
it.
Call me.
Hey, Big Mo.
What's up, brother?
That's all right, man. Have a good night, brother.
Okay. Thanks, Marcus.
Hey,
Yeah,
Marcus, Marcus, I'm gonna call you on Monday. I got something for you.
you real talk, G. Okay, let's do it.
Yeah.
Let's do it. I've been
All right.
waiting. Let's do it. All right, Mo. I'll talk to y'all later. Have a good night, man.
Okay. All right, guys.
All right.
See you, Marcus.
Yep. Later, G.